Okay, all right, Mangalam, thanks very much for that. In fact, to take this conversation forward, we have Manoj Menon, who's the head of research and FMCG analyst at ICICI Securities. Manoj, hi, welcome to the show, and thank you very much for joining in. Well, just wanted to start by talking about key demand trends. If you could break it up for us in terms of the expectations, both from the urban as well as the rural space, and what would it translate in terms of numbers this quarter?
Sure. I'll comment about the quarter and also a little beyond that as well, because quarters typically tend to be fairly volatile given the base, etc. And also I'll take it in two parts. One, what is the likely expectations on consumer staples or FMCG on the discretionary side? Okay, that's the baseline. In consumer staples, we have already seen that urban has been outperforming, and whereas rural has been underperforming, right? Now, having said that, there is a nuance here. So if you take a step back and go 24 months back, when the input inflation hit, right? Most companies actually took significant volume reductions in their, let's say take the case of soaps as a category. Anywhere between 30 to 40% of soaps are sold at 10 rupee price point, right? So companies reduced volumes, right? So when companies blame, volume recovery not happening or there's a volume headwind, honestly speaking, I'm not sure whether the FMCG companies are doing significant self-help. That's point number one. There's a bit of margin focus. If you look at most companies, the margins are at its peak, etc., right? So the expectations are fairly high internally for many of the companies, right? There are a few exceptions here and there. That's point number one. Second has been that macros has not been necessarily very supportive given the consumer inflation, what the, let's say, common consumer has faced, right? Which means that when we look at the next 6 to 12 months, one of the important ingredients is that we need some sort of a stability assumption in CPI, because ultimately it's all about inflation expectations also, right? For example, the consensus view is that, let's say, crude should kind of correct from where it is today, right? Which means it's actually a consumption tailwind, right? That's one. Having said that, generally speaking in FMCG, we have a neutralist stance for a while now. We prefer discretionary companies over FMCG. For the reasons I said is because except for a few companies like a Godrej Consumer or a Tata Consumer or a Jyothy Labs or a Nestle till now, I'm not sure most companies are doing significant self-help to outperform the market. You can't just blame macros, forever.
It's interesting. You can't just blame macros forever. Of all your calls, what was extremely interesting and perhaps a bit of an anti-consensus as well is your underperform rating that you have in the paint sector. I mean, all those stocks come up for you. In the past, they've been huge wealth creators. But in the near future, there has to be some sort of competition coming in, even though crude prices are coming down. What exactly explains your underperform rating on the paint sector itself? And in that, why are you positive on Kansai Nerolac?
Okay, you picked it up pretty well, actually. Look, I think it is assumed that paints industry is a citadel. Okay, that's a basic assumption, right? When analysts and portfolio managers explain the high multiples for paints, the inherent assumption is that companies can grow faster for longer, right? Both ingredients are very important, right? That's point number one. Now, if you actually look at the last 5 to 10 years, contrary to the popular perception that it's an industry with extremely high entry barriers, you have the success of Indigo Paints. Bit of success for JSW Paints. Nippon has actually created a bit of market share in South India, particularly in Tamil Nadu. So this is really and AkzoNobel has kind of turned around in terms of their market share lose trajectory to now a gain trajectory. Right? You have 4 companies, right, who have actually gained market shares. So contrary to the perception, it is a citadel, but probably the wall is not as strong as it is assumed to be. It can be broken, or it's already broken. In that context, if you bring Grasim, and their investment plans, what they have outlaid and announced, etc., we are of the view, we continue to have the view for the last 12 to 24 months that, it is getting into a disruptive phase currently. Now, disruption does not mean price disruption. It can be process disruption, it can be product one, or it can well be that in the next 2-3 years, as Grasim spends on brand building measures, ultimately you have to tell the consumer that, let's say there's a new brand in the market, right? All the companies will have to increase the ad spends to manage the share of voice, right? So one is a maybe revenue disruption not there, etc. is debatable, but there's definitely a cost disruption from the incumbent's point of view. In that context, high multiples looks unsustainable. Kansai Nerolac, they got 45% of the revenue of Kansai Nerolac come from the non-decorative piece in which the Grasim threat is not there.
Okay, all
it's a relative call.
All right. Well, valuations we'll come to in just a bit, but before that, Kalyan Jewellers and Titan, those are 2 stocks or a space that you like.
Yeah, continue to.
And why is that?
So look, it's in markets, in life, you need a lot of luck, right? Now, that's a philosophical statement to make. Look, jewelry is one industry. Without taking away anything from execution from both the companies, they are in the right space, right time in terms of formalization gains, right? So we all talk about informal to formal, shifts. But it is a case of a classic, what we are witnessing in front of our eyes for the last 5 to 10 years, that thanks to government actions, thanks to consumers preferring brands, various reasons. Let's say hallmarking, for example, right? I mean, hallmarking essentially is telling the consumer is kind of getting more aware that, I need to go to a branded, sort of an outlet, right? So that's one aspect. Second is also that, what even in this quarter, by the way, right? For example, in our understanding, let's say there has been a significant expectation of wedding-linked consumption recovery for certain pockets, right? Our understanding is that consumers have probably preferred jewelry as a product versus, let's say, the other things which you will consume, let's say, a men's ethnic wear or any of those, right? On a relative scale, right? I think inherently the basic point is, gold is always preferred. And also, if you look at the last 6 to 12 months, gold inflation at the margin has actually helped the companies to sell more because there is an expectation that there is further increase in gold prices from a consumer point of view. So multiple things, but not taking execution part away at all. And to be fair, both these companies have expanded, significantly beyond tier 2, tier 3, and that credit to them for that expansion.
So, because this formalization thing will help all these jewelry players, why limit it then only to Kalyan? We had a lot of other players come to the market very recently as well. There was Moti Sons, there was RBZ, and then just before that we had Senco Gold as well. All of them have done well. So if formalization is something to go by, and belief is that everyone's got their act together, not a lot of people are skimming, the customers, etc., then why not look at these which offer relative comfort when valuations are concerned?
On taken, Mangalam. The only thing it's our bandwidth challenge, if I put it that way, right? So we just look at the institutional large names. I mean, that's just one. Obviously, it helps everyone, but it's a tailwind kind of the entire industry benefits. Only one aspect to remember is when you look at a lot of the regional names, it's important to appreciate that the total addressable market for them could be a very different one versus the national players.
So, just one question before I hand it over to Ekta. I wanted your thoughts on Trent. And you usually speak about big themes for the next couple of years, etc. What explains the sort of valuation that Trent enjoys, and what is the big theme for discretionary retail over the next few years?
So look at Trent in two parts, right? It's been an amazing story of execution. In fact, a few years back, we had a thematic to say that, Zudio is probably the next Tanishq, right? I mean, so I think it's very happy to note that it's actually playing out. The big picture in Trent is that if you look at Westside, right, it has got a high salience coming from the woman consumer. It also has got a high salience from private label. So essentially, on one axis you have high woman consumer salience, and on Y axis you have the other one. What the company is actually conveying to you without actually telling you that, look, don't ask me questions on my, let's say, fashion spotting skills, because you are selling to women successfully year after year. High private essentially means that you have high, gross margins, right? So you've kind of achieved nirvana in retail. That's Westside I'm talking about, right? And that company, when they execute successfully, the significant formalization, in Zudio, for example. Zudio, I'm not sure how many of us have actually walked into, but as analysts, we have done that. First of all, you got very, very limited price points. The consumer is not confused. Point number two, you can actually buy a good jeans for 400, 500 rupees, right? So essentially, that is formalization, converting the consumer from buying, let's say, from a Hill Road. People who are from Bombay would relate to it, right? Or a Santa Cruz market, or a T Nagar in Chennai. You're essentially saying that kind of, come to us.
Okay.
And for the, AC experience, kind of, better purchasing experience, etc., for the same price. Right, so so that's Trent.
But as we end this conversation, when you're talking about price, you're also talking about these hefty valuations in the FMCG space. So how does it stack up in terms of valuations for you? Which one are you still willing to spend on? Or say there is a buy despite the higher valuations because you expect that move up to come through?
So the top three for us continues to be actually some of the names which Mangalam highlighted as the performers. Because there's a reason why they're the performers, because they got the template right. They're not really blaming the macros, right? I mean, so just to put it, quite directly. So it's Godrej Consumer, Tata Consumer, ITC, etc. It's not really the rest of the pack.
All right, Manoj, thank you so much. Always a pleasure listening to your views and hearing you out your thesis on the consumer space itself. Thank you for stopping by and joining us in the studios itself. With that, we'll take a short break. Stay with us. We'll come back with more on the markets on the other side.